Hello everybody, what's going on? So Sofi stock take a bit of breather yesterday, trading down about 3.4% and hitting levels around that $19 mark. Now I know whenever we see red on the screen, the panic sellers start coming out of the woodwork. But if you're a long-term investor or if you have been following the fundamentals of this all-in-one fintech giant, you know that days like today are often where the real money is made. In this update, we are breaking down why the stock moved, what the big analysts at Goldman Sachs and Argus are saying, and most importantly, why the upcoming Q1 2026 earning report could be the massive catalyst we all have been waiting for. So let's dive in. But first, let's look at the price action. SoFi dipped to a low of $18.69 yesterday on slightly higher than average volume, about 65 million shares changing hands. This comes after a rally volatile start of 2026. Year to date, the stock is actually down 34%, which sounds scary until you zoom out and realize it's still up nearly 70% over the last 12 months. So, what's driving this recent dip? We have seen some macro noise concerns about AI disruption in finance and some geopolitical uncertainty. We also had Goldman Sachs recently adjust their price target from $25 to $20, maintaining a neutral rating. But here is what the hold rating and the neutral rating targets are missing: the sheer volatility of SoFi's growth. The bears want to talk about the price target, but I want to talk about the revenue. In the most recent data, SoFi quarterly revenue was up a staggering 39.6% compared to the same quarter last year. Think about that. While traditional banks are struggling to find growth in a shifting interest rate environment, SoFi is essentially a growth machine disguised as bank. They are consistently beating expectations for the upcoming first quarter 2026, which they are going to report on 29th of April. The company has guided for an EPS of $0.12. Compare that just $0.05 a year ago. That is more than double earning power in just 12 months. And the full year 2026 guidance, they are looking at 0.60 per share. When you look at the company growing its bottom line at the pace, a 3% dip on Tuesday isn't a reason to sell. I would say it's a gift. Because what really sets SoFi apart is the one stop shop strategy. They aren't just a student loan company anymore. They have built a financial ecosystem. Just this month, they have launched big business banking to power both fiat and crypto banking on a single regulatory platform. Apart from that, they have also integrated the Fed Now service through Galileo, allowing for instant 24 into 7 bank service transfer. I would say that this isn't just keeping up with the big banks, this is out innovating them. Every time a member joins for a high yield saving account and then stay for a credit card or an investment account, SoFi's customer acquisition cost drops and their lifetime value skyrockets. That's why the net margin is sitting at a healthy 13.3% and their member growth is hitting record highs. Now let's talk about what's next. We are exactly 1 week away from April 29th earning call. Management is projecting net income to increase by 125% year over year to 160 million for the quarter. If they hit those numbers, or better yet, if they beat them like they have done consistently over the last 4 quarters, this $18 to $19 price range is going to look like a distant memory very quickly. Analysts also have a consensus price target of nearly $25. From where we are right now, that represents a massive upside of over 30%. While the market is distracted by the short term noise and hold ratings, the smart money is looking at this 38 to 42% compounded annual growth rate in EPS projected throughout 2028. So, my take here is that Don't let the red days shake your conviction. SoFi is no longer just a speculative fintech play. It's a profitable high financial powerhouse that is systematically taking market share from the legacy players. To me, the fundamentals are looking stronger than ever. The innovative pipeline is also full, and the earning tailwinds are right around the corner. I'm looking at that 3.4% dip as a chance to polish the portfolio before the Q1 numbers drop. Let me know what you guys are doing, because I think at this point of time, SoFi is at great level, like $19 range. We won't get it in future. That's why I'm adding as much as I can, because fundamentals and everything is looking quite strong. After the Q1 earnings, I believe very soon we will see this bouncing back to $25 level. That's my target for the next quarter. With that said, thank you so much for being here. See you next one.